Alright guys, this is for beginner traders that want to get into supply and demand trading and you haven't found any sort of strategy on YouTube, any sort of guidance or anything at all. And I'm basically here to just kind of like show you what I'm doing and what I've done. And yeah, let's just get right into it. So I trade Forex and I trade gold and Bitcoin, but I mainly want to focus on Forex and gold. And today's video for beginners is going to be about trend shifts and how you can actually trade trend shifts as a strategy, because the trend shifting is a result of supply and demand changing, right? Because when demand exceeds supply, prices rise, which means the market will go up. And when supply exceeds demand, prices fall, which is when prices go down. So we're looking at a downtrend, a bearish trend, and we're going to talk about what I would do and what you should do if you were looking to buy this. Now, I wouldn't buy this here, obviously, because we're still in a bearish trend. We haven't had any proof that the trend is increasing or gaining any bullish momentum. Oh, son of a bitch. Fucking. Damn it. Alright, here it is, the chart. Fucking put the chart on the wrong screen. We went to the wrong chart. So, if I was trading this, I would want price to look like this. I would need to see price actually break above. Let me move that line. Sorry. God damn it. Where's the fucking thing? Oh, here it is. I would need the line to break above here like this, showing significant demand, which is when we have these large candles that break all this previous structure that was going on here where I'm pointing the blue arrow. I need price currently to have so much demand that it just breaks all of these highs and takes out all these highs with large unhealthy price action candles. So until I see that, I'm assuming that this is going to be bearish, right? So what you want to do is when you want to find a bearish trend or a bullish trend, and my rule is once you do see that impulse movement going up, right, you don't immediately just trade the retracement or the pullback, which is when price comes back down before it continues a trend, which is what a pullback is or a retracement is. It's the market balancing itself, and a pullback, like I said, in the correction is when the market comes back down before continuing that direction it was in. So that would mean if we're buying, the market goes up and comes back down like this before continuing up, comes back down like this before continuing up. That's what a correction is. It's the parts where it comes down before going up. Same thing can be applied to when it's bearish. So the first step you do is you want to wait till you see the trend shift by showing significant demand. In our case, we would need to see the market go up like that line. And then a lot of traders trade here thinking that, okay, I'm going to wait till it goes down and then I'm going to trade it again going up, right? But that's not how it works, because it's just too risky doing that, because a lot of times people will just assume it's going to go up like this, but then it'll just go back. It'll do this. It'll come up here and it'll just come back down. So my solution for that as a beginner and intermediate trader is to wait for price to show demand, which is you can get from the news, of course, because that's what I use. I don't trade unless there's actual news. I don't trade during the news. I trade before or after the news, and I align my trade setups to the actual news event that's going on. So I'm not actually reading any articles or doing anything complicated. I'm just being aware that the news simply moves the market. And when I come on here to trade, I don't trade all these different time frames. I'm really simple. I just log on here, 15-minute, 1 hour, 4 hour, like basic time frames. I don't really need Pro or Trading Pro for that. I just use the same system over and over again. So, like I was saying, I need the market to come back down, and then I need the market to come and go up again. So, like this. So now we have something different. Now, it wouldn't be that dramatic going straight up like that. I just kind of drew that line too. It could be, but it would look like this, right? So then I would actually look into a setup. And that's the key here. So when you're looking to trade to make money when the market's going up, you're not waiting until you see demand and then entering right down here. You're waiting for it to come back down here, and then you want to see some more demand, because then we have two confirmations of momentum in the market showing you that there's money coming into the market. Because when there's demand, money's coming into the market. When there's supply, money is coming out of the market, right? So this first impulse movement going up, we said, okay, well, the market's going up, and that gives us a little confirmation because it's going up. It has some sort of demand, right? But then our second confirmation, which is our two-step confirmation, which is what I use when I'm trading, is this line right here. This is our second form of demand. And so in total, we have a high here, a new low, and a previous high, and a previous low. Total 4 pieces of market structure. Next is you're actually going to identify your current range because we know we're going to buy right now, right? So our current range is our current high, which is right here, and our current low, which is down here. And now that we have our current high and low, we need to divide that range in half to determine where we're going to buy. So if we're buying, we're going to be buying towards the low part of the range. Why? Because the low part of the range represents where prices are cheaper, which is called their discount zone. So you see those blue lines I just drew, the top one and the bottom one? Let's take another line and let's drag it across here like that. And I just divided it in half, right? Now we're going to shade in the bottom half. Why did I shade in the bottom half? I shaded in the bottom half because that represents the area that we're going to look for buys. We're going to look for demand zones in that shaded blue area, okay? And so that's how this works. This is how I trade. When I have confirmation of demand coming into the market, I do this visually on the chart by waiting for what they would call the breakout. The breakout is just a price or the chart breaking out of a price cycle because of supply and demand. So like a price cycle will be the trend. The trend is bullish, and then we have a breakout to the downside because it has money in it that's influencing the market for it to change in the first place, which is called volume. So volume moves the market. That's why I don't really have my volume chart now because I don't leave it on all the time. I just leave it on when I'm using it for specific zones and areas. So even right here, where I'm pointing the blue arrow now. Hold on a second. Yeah. So I'm trying to find that fucking. There it is. Where I'm pointing the blue arrow now. When we had this tiny movement going up, we started down here to get some high volume, the high green tower. And so really what you're going to do is we're going to go look at another pair right now. So I want to show you an example of this. So we are on gold right now, guys, and this is actually a live chart that I'm actually looking to trade. So yeah, and I actually even have it labeled. So the first thing we're going to talk about are the 3 blue boxes, right? The 3 blue boxes represent my demand zone and the zones that I'm looking at trading. When the market has very high demand, the market does not come down and retrace or correct itself, which is what we talked about earlier. Correction, retracement means when the market does a down move before going up, and for a bearish market, going up before going down. It fills out inefficient price action to balance out the market. So if there's such high demand that the market isn't going to just come back down and retrace all the way to the bottom, I call that a hot market. So a normal medium market, an orange market, a warm market, would be the market going up because of demand, right? Then coming down because of supply, then going up because of demand, then going down, then going up. That's an even market. But a hot market doesn't look like that. A hot market has so much demand, it doesn't always have time to come back down all the way. So because of that, we just wait for it to go up. It'll look like this. It'll go down, then it'll go up, then it'll go down a little bit, and you see the difference how far it went down. That's a hot market. A warm market, like I just said, is up, down, and you see how it's going down more? Up, because I'm drawing it, down, up. That's how it will look. And so when you were trading and you're looking for setups, you want to trade either 2 of these markets. You don't want to trade a market that looks like this. It's not really going anywhere. It's like this. It's gonna just choppy and it doesn't really look like it has any direction. I don't trade markets like that. I use the forex. I use forexfactory.com to tell me the news that's coming out, and then I trade based on that news. Because the news simply adds supply and demand to the market, because real things that happen in the world affect our screen and affect the charts that we're trading, whether it's forex, futures, gold, like that. And so yeah, guys, what you need to do first is get good at market structure. I say that in literally every video. And then you need to identify your trend shifts, because if you can identify your trend shifts, you're basically setting yourself up for a good long-term trading strategy, because you're good at identifying when supply and demand is coming into the market. And then when you guys get really good at that, then you can move on to saying, okay, I know right now that supply has came into the market, and I want to trade this. So then you can actually apply your own strategy or my strategies. For me, I trade the demand zone I trade is called a fair value gap. You can look it up on YouTube or watch some more of my videos. And then the supply zone, the same thing, or order block, because those are the two types of blocks or candlesticks that usually mean that there's demand in the market. So let's see if I can find one. Yeah, here's a fair value gap right now. So the whole word gap comes from the fact that when we have a lot of supply and demand in the market, it moves, right? It moves dramatically, right? So if we look at the screen to the left, it started moving normal, and then we have this giant two big blue candles right here that I'm pointing at, and that was created by demand. And so because that demand is so much money, it usually leaves behind what's called a gap, and that those gaps are where price retrace slash corrects itself to. So what I mean again, what I mean by retracement, I have to keep saying this in case some people don't get it. What I mean by retracement slash correction is when the market goes up, the down moves. In our case, the down moves before the up moves. It comes down, the down move before the up move, right there. It comes back up, and it comes back down, the down move again. So those three circles are the down move before it goes up, which is happening right now on gold. It's going. The gray candles represent the supply. It's going down before going back up. And so, depending on how much money and how much demand this was, the market may not come down like to that tiny blue rectangle box that I have highlighted. That this is the lowest demand zone because on a different time frame, there's an actual gap there that I identified. So what's likely going to happen is the market is going to just come down to the middle of this range before going up, rather than coming all the way down. And you'll notice that. So yeah, so first get good at market structure, then identify your trend shifts, and then that's going to help you actually apply strategies to that knowledge that people teach you, and it's also going to help you just identify when supply and demand is coming into the market so you can potentially get into trades. And this is way better than using a trend line or using anything else like that. So yeah, guys, I hope this was helpful. And again, I've used this myself because I have my home on my Discord. I'm not trying to sell you my Discord, don't worry. It is $49 a month if you are interested in it. It's in the description. It's not $1,000 or $100. It's just a community I built, and inside the community, I just have like group trades. I have my trade setups. I have some channels that say market structure. So in case you're learning from my group and you're like, okay, so I want to see actual examples of the setups and other things you're trading. That's what this is for. So this literally is a whole chat dedicated just for market structure, and it just shows a bunch of screenshots of market structure. So like all this is market structure. Market structure, you see how it looks the same? Market structure, just different examples of the same thing so you guys can actually learn it in your head. So then when you go on a chart, you can just see it the same way I do, and then that's going to help influence your trading. So let's take you to another chat. This is the supply and demand chat. So this chat shows you the type of supply and demand that I trade via screenshots, and also I type some stuff out. So like here, this is an example of an order block, which is one of the types of supply and demand that I trade. This is a supply zone. And so this would be a trade. This will be a trade setup. So once you apply what I told you guys earlier about the market structure and the trend shifts, you're literally ready to trade this because okay, I learned market structure. I know that the trend is bullish, and I know right now about trend shifts. So now I'm on the chart and I see a trend shift. I see the trend changing bullish again, and that means that I can look for a trade setup. And so this is the one of the types of trade setups that you would trade an order block. And so I teach you guys how to enter this and exit it and blah 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 and find them. You can literally find these on a chart all the time. It's just about trading the right one. So yeah, guys, I hope this was helpful. I'm gonna show you guys the group more. I have a free training here, of course. I also do one-on-one, and I'm trying to show you guys. These are all the trades, the group trades I show my trades to the group and everything. These are all my trades, and I literally been trading this strategy for so. Ignore that. I don't know why. I was trying to be cool and trying to put this in here, but just ignore that. So yeah, so this is all trades I've taken, and then this is like the win section, and then it just shows you like the same. I'm literally trading the same setup over again. Gaps, order blocks. This is a gap trade. I'm trying to find an order block trade. This is an order block trade. That's all about trade. And I don't trade trend lines. I use trend lines as liquidity or take profit. But yeah, guys, if you guys are interested in this, it's only $49 a month to join. It's cool. It's a good group. Um, I have what's called the tribe rules. No being lazy. No unprofessionalism. No slandering. I'll kick you out in a heartbeat. All right, guys. So we're not gonna come in here and be a dickhead. If you guys are interested, like I said, join the Discord. If not, watch my videos. There's plenty of videos on YouTube. But yeah, guys, peace.